In the ever-evolving theater of global geopolitics, a new and unexpected act is unfolding, not on a traditional battlefield, but within the heart of India's rapidly expanding automotive industry. Here, the clash of nations is being played out through factories, assembly lines, and boardrooms, rather than tanks and soldiers. As of late 2025, China has made a dramatic move by blocking its companies from investing in India's auto sector. A decision that sends shockwaves far beyond the world of business and finance, touching the very core of international relations in Asia. This is more than just an economic maneuver, it's a bold geopolitical statement, one that escalates the simmering rivalry between the world's two most populous nations, and has the potential to reshape the landscape of global trade for years to come. For years, the economies of China and India were deeply intertwined. China was known as the world's factory, churning out goods at an unprecedented scale, while India became the global back office, powering services and technology. But now, Beijing's latest move shatters that familiar narrative, exposing deep-seated strategic anxieties and revealing just how fragile these economic ties can be beneath the surface of cooperation. Economic policy has become a weapon in this new era. Investment is now wielded as a powerful tool of statecraft, with each side maneuvering for advantage in a high-stakes game. For India, this is a direct and urgent challenge to its ambitious Make in India campaign, which aims to transform the nation into a global manufacturing powerhouse and create millions of jobs for its growing population. For China, it's a calculated risk, sacrificing immediate market access in India in exchange for greater strategic leverage, hoping to influence the region's economic future on its own terms. International automakers and suppliers now face a logistical nightmare, as their once blended supply chains are suddenly threatened by new barriers, delays, and uncertainty, forcing them to rethink their global strategies. The weaponization of economic interdependence is no longer a distant theory. It's a reality unfolding before our eyes, and the world is watching closely to see which nations and companies can adapt to this new environment, and which will falter under the pressure. The next chapter of international relations is being written right now, beginning with this decisive act of economic statecraft, a move that could redefine alliances, reshape industries, and set the tone for the Asian century. To truly grasp the weight of China's latest move, we need to look beyond the headlines and understand the deep-rooted tensions that have shaped the relationship between these two Asian powerhouses. We must revisit the fraught and often volatile history between India and China. A history marked by suspicion, rivalry, and moments of outright conflict. Their rivalry, rooted in unresolved border disputes and the bitter 1962 war, has simmered for decades, even as both nations expanded their global influence and economic ambitions. Over the past 30 years, trade between the two countries exploded, reaching unprecedented levels. However, India's massive and ever-widening trade deficit with China bred deep unease among Indian policymakers and business leaders. Chinese goods, especially auto components and electronics, flooded Indian markets, making China the dominant supplier for critical parts and technologies that power India's industries. Chinese capital also poured into Indian EV startups and mobility platforms, fueling a golden age of collaboration and innovation in India's tech and automotive sectors. For a time, it seemed like economic cooperation might overcome old hostilities, as both sides benefited from shared growth and investment. Yet after the deadly 2020 border clashes, India began to de-risk its economy, tightening investment rules, scrutinizing Chinese deals, and banning dozens of Chinese apps to protect national interests. Domestic manufacturing was aggressively promoted, and the once robust economic ties between the two countries began to fray, with both sides growing increasingly wary. China's recent investment blockade is a direct response to India's efforts to reduce its reliance on Beijing, signaling a new phase of economic confrontation. What was once a cold economic war fought quietly in the background is now an open and escalating confrontation, with both sides digging in. The boardroom has become the new battleground, where business leaders and policymakers clash over investments, supply chains, and market access. The era of uneasy cooperation is over, replaced by a tense standoff that will shape the future of Asia's two giants, and perhaps the world. On December 15, 2025, China's Ministry of Commerce announced a sweeping suspension of new investments in India's auto sector. The official reason, an unfavorable and discriminatory environment for Chinese firms. Over the past decade, Chinese companies invested $5 billion net in India's auto industry, with another $8 to $10 billion planned, now gone overnight. The ban halts not just automaker investments, but also venture capital and private equity funding from China and Hong Kong. Beijing's message: cooperation must be mutual, and India's protectionist policies have consequences. This is no minor measure, it's a full-scale economic blockade. The entire financial ecosystem supporting India's auto industry is now off-limits to Chinese capital. The move is designed to inflict maximum impact and force India to reconsider its stance. The stakes for both nations and the global industry are enormous. India's response was immediate. Stock markets dipped, and auto executives braced for disruption. The country's ambitious EV targets, reliant on Chinese technology and batteries, now face major delays and higher costs. Indian factories, long dependent on just-in-time imports from China, must urgently seek new suppliers or ramp up domestic production, both costly and slow. The investment ban casts a shadow over existing trade, raising fears of further restrictions. Millions of jobs are at stake, as cancelled projects threaten employment and skill development. The government faces mounting pressure to attract alternative investment and accelerate industrial policy. The auto sector's future, and India's manufacturing dreams, hang in the balance. The shock is real, and the path forward is uncertain. India must adapt quickly or risk falling behind. China's blockade isn't just India's problem, it's a shockwave through the global auto supply chain, sending ripples that are felt in factories, showrooms, and boardrooms around the world. For years, automakers have depended on a seamless, just-in-time flow of parts from China, with final assembly often taking place in India. This efficient system kept costs low and production lines moving smoothly. Now, with the blockade, strategies like China Plus One, which aim to diversify risk by adding suppliers outside China, are suddenly in jeopardy. Companies are being forced to urgently rethink their entire Asian operations, scrambling to adapt to a rapidly changing landscape. Automakers are racing to find new suppliers in Vietnam, Thailand, Indonesia, and even further afield. But replicating China's vast scale, efficiency, and established logistics networks is a monumental challenge that will take years, not months, to overcome. In the short term, this disruption means higher costs for manufacturers, and those costs will inevitably be passed on to consumers, leading to rising car prices worldwide and potential shortages of popular models. Yet, amid the turmoil, there's opportunity. Countries like South Korea and Japan are stepping in, offering advanced battery technology and fresh investment to fill the gap left by China, hoping to secure a bigger share of the global market. Western tech firms, too, may find new openings in India's rapidly growing market, as the country seeks to build a more resilient and self-reliant supply chain. The blockade is accelerating a global shift away from China, a trend that began with the US-China trade war and was intensified by the pandemic, as companies look to reduce their dependence on a single country. Ironically, China's move may end up speeding its own economic isolation, as more nations and companies seek alternatives and invest elsewhere. The global auto industry now faces a defining moment, forced to reinvent itself, modernize, and build a more flexible, resilient future in the face of unprecedented disruption. This isn't just a trade spat, it's a calculated move in a larger geopolitical contest. China aims to contain India's rise, especially as New Delhi deepens ties with the US, Japan, and Australia through the Quad. By targeting India's auto sector, Beijing sends a warning, a line, with the West, and there's a price to pay. The move tests the resolve of India's allies. Will they step in to fill the investment gap? For developing nations, the message is clear. Chinese investment comes with strings attached. Economic dependence can quickly become a tool of coercion. The world is watching to see if democracies can offer a credible alternative. The stakes go far beyond cars. They touch the future of global alliances. Experts see China's move as the economic equivalent of a border clash. Business and politics are now inseparable. Beijing is willing to take losses to slow India's rise as a manufacturing rival. Western analysts call it economic intimidation, a tactic China has used before against countries like Australia and South Korea. The message: think twice before joining coalitions China opposes. Some Chinese experts argue the decision also reflects real business frustrations with India's regulatory environment. It's a hardball negotiating tactic as much as a geopolitical gambit. Industry analysts warn China may be risking its own dominance in the EV supply chain. By weaponizing its strengths, China gives others a reason to diversify. This could accelerate global investment in non-Chinese battery tech. The gamble is high stakes and could backfire. India now faces a defining test. Can it turn crisis into opportunity? The immediate challenge: secure the EV supply chain by attracting investment from South Korea, Japan, and Taiwan, and ramp up domestic R&D. Building battery gigafactories and securing raw materials is now a matter of national security. India must deepen alliances with the Quad and Europe, framing this as a mutual opportunity to build a resilient, China-independent supply chain. The Quad must evolve from a security pact to an economic alliance, with India at its core. This is a test of national will and industrial policy. If India succeeds, it will emerge stronger, more self-reliant, and a credible alternative to China. The blockade could be the shock that awakens India's full potential. The journey is tough, but the stakes, economic sovereignty and global standing, are worth it. India's response will shape its future for decades. The China-India standoff is a wake-up call for the world. Globalization is no longer frictionless. Trade, investment, and supply chains are now tools of national power. Every nation and corporation must ask, how resilient are our supply chains? How exposed are we to political risk? De-risking and friendshoring are now urgent imperatives, not just buzzwords. For developing nations, the lesson is clear: diversify partners and build strong domestic institutions. Economic dependence can quickly become political leverage. The path forward requires balance, resilience, and strategic alliances. Citizens must demand a global system that is not just efficient, but also secure and equitable. The future of trade will be shaped by the choices we make now. The wall between China and India is a warning: build bridges, or risk a fractured world.